As we look at the current economic situation, fears of a recession loom large, and the impact future rate hikes might have are worrying everyone. All eyes are on the markets, on investors, on bond yields, and what they might indicate for the days and weeks ahead. But one financial giant and a name synonymous with success in the world of finance is facing heavy turmoil due to this economic crisis. Charles Schwab, the largest brokerage in the United States with a $7 trillion empire, is currently feeling the heat after the collapse of Silicon Valley Bank and a few others too. Now, with its $7 trillion in assets under management and 35 million accounts for the past 50 years, they have been known for offering and providing a wide range of investment services to clients worldwide, and most of their customers really like them. By all accounts, they seem to be one of the best banks out there, but that doesn't mean that they're one of the safest. Their own chief investment strategist, Liz Saunders, recently came out and explained that the downfall of Silicon Valley is a clear example of something breaking in the financial world. But still, this bank in turmoil caught them off guard, causing a severe decline in their stock prices that doesn't really seem to be reversing. Its share price has plummeted by 33% over the last month, their worst decline in 35 years. Their $7 trillion empire was built on low interest rates, and now it's starting to show cracks. Now we're watching what could be the final days, the death throes of Charles Schwab, as investors all over the world are trying to work out how this is going to end in any way other than collapse. As we dive into this, I think it's really important to note that there are a lot of differing opinions here, and many right now are screaming that everything's okay, that there's nothing to worry about, that the banking crisis doesn't even exist, and that you should just ignore all the chaos. These people, though, are categorically wrong, and you need to put yourself and your financial circumstances first, not anyone else's, and on the whole, this crisis is very weird. Now, this crisis also does actually exist, and actually it's not going to disappear silently, though it has so far remained focused on regional banks in the United States, the First Republics, the Signatures, and the SVBs, the smaller fish. Now, Charles Schwab is no regional bank, they're one of the big boys, but still the cracks are visible when we look deep enough. Charles Schwab have been investing heavily in long-dated US Treasuries, and it's clear to see that they have made a massive blunder. They overexposed themselves. They thought the risk-free return of US Treasuries was truly risk-free. But unfortunately for Charles Schwab, interest rates moved significantly higher as we saw the fastest rate hiking cycle in history. This caused the value of these bonds to drop significantly by about 40% according to TLT, costing the bank tens of billions of dollars in unrealized losses. On the flip side, Charles Schwab still expects to collect 100 cents on the dollar if they can hold onto the bonds until maturity. The problem exists if they sell their bonds, which they may be forced to do. They would then succumb to a $12 billion loss on top of the already $15 billion worth of losses they haven't realized on their balance sheet. They have $7 trillion in assets under management though, so surely a $27 billion loss wouldn't be so disastrous. While those assets aren't theirs, they're just holding on to them, managing them for their clients, so they don't help one bit. And they're being squeezed from other sides as well, as they're simply not paying enough interest on their deposits to their customers, so those customers are demanding more these days. Charles Schwab therefore have to increase their outgoings or risk losing customers, and losing customers is what could cause this house of cards to fall down. And of course, this all comes back to the monetary environment and to the Fed. And speaking of the Fed, there is a phrase that you may or may not have heard before: the Fed will tighten until something breaks. Essentially, this means when they're tightening, they're trying to damage the economy to stop inflation from running rampant, and usually they're waiting for the job market to break because people without jobs stop spending money, and that drives inflation down. This time around though, the banking sector broke before the job market did, and SVB's collapse and Charles Schwab may be next on the hit list. And it's not even clear if the Fed are going to change their tune if a firm like Charles Schwab does fall, as today they are claiming all they care about is inflation and ensuring it's truly defeated. History has shown us that the Fed's selective about stepping in during crises, so it's incredibly difficult to actually predict what they will do the next time round. Now, it's also true that this is the exact same scenario that faces almost every bank out there, but Charles Schwab are being hit much harder than most other blue chip firms, and most most people still don't understand why. Some will say that as much as Charles Schwab have a strong reputation and key backing in the past by investors and executives, there is still a potential for a run on the company, for them to be exposed, and for the snake to finally come out. Now, no Stoic Finance viewer is going to be surprised when I say that the media has a blind spot when it comes to news, especially surrounding finance and investment topics. After all, the media tends to be owned by billionaire moguls who have a fundamental desire to make sure you don't really know what's going on. Nowhere has this been more true than with the banking crisis we saw last month, as these organizations failed to warn us of any of the warning signs and instead chose to sweep everything under the rug. And it's been a fight to remain properly informed and free from biased news over the last few months, but thankfully I found a solution in Ground News. They're a news organization dedicated to exposing bias amongst other media outlets. They combine all the articles written about a story into one place so you can get the full picture. They have thousands of sources and pull over 100,000 articles a day, so you can imagine the number of stories they can do this for. Ground News adds context and transparency. For example, we can see what entity owns which source, how factual their reporting practices are, and the political bias of each source. You can follow specific topics. For example, I'm following, as you would expect, Silicon Valley Bank, so you always know when news stories surrounding that topic pop up, and they even have a blind spot function which shows you articles and stories that are being ignored by certain media outlets to keep you fully informed. I'm honored to partner with Ground News for this video. Go to ground.news/stoic, link down below in the description, to check out the full article and sign up for free, or subscribe for unlimited access if you support the mission and find honest news as useful as I do. Now, Charles Schwab have about $20 billion worth of intangible assets, meaning they wouldn't really get anything for these assets if they liquidated the business. These assets do have some value, but they are incredibly difficult to quantify. They're incredibly difficult to sell, and there's no guarantee that they'll be worth anything in the future. But thankfully, Charles Schwab do have a lifeline. They have access to the Federal Reserve's new emergency lending program, which could provide it with more than $200 billion in cash to deal with potential deposit withdrawals by clients if needed. But if Charles Schwab start to have major problems, many other banks will be having problems as well, and there's a real serious chance that $200 billion is not even close to being enough. And the recent turbulence in the banking industry had left investors seriously questioning the company's future, which fundamentally is the reason for their share price decline over the last month. The share price hasn't dropped 30% to match a 30% drop in customers or assets or earnings. That share price drop is almost entirely just the market trying to price the likelihood of the entire bank going under. There are also reports that the company's earnings would be lower than we previously thought, and although this isn't a death sentence, it's clearly not good news. Their cost of borrowing was increasing as interest rates rise, and its deposit base has been steadily shrinking as customers move their money into more lucrative accounts with higher yields and maybe safer even places too. And all this, it reduces the amount of capital at their disposal to make money with. Management has attempted to address these issues by sending out a letter to investors saying that focusing on the unrealized losses in their held-to-maturity portfolio is misleading, but as we all know, that's exactly the same line that UBS had right before they collapsed too, so this statement is barely worth the paper it's written on. Schwab have also been going around sending emails to smaller clients, assuring them that their accounts are backed by the FDIC for up to $250,000, which is absolutely true. These deposits are backed by the US government, but no one wants their money on hold while they wait for Joe to send them a check. On top of this, Schwab executives assured investors that they wouldn't have to resort to selling their investments, but those unrealized losses speak for themselves, and that's enough to spook investors. The decline in Schwab's stock price had left many investors wondering if the company would ever recover. At first, most expected them to pop back up to where they were, as the 30% drop was perceived as an overreaction, but that recovery never came. Now the future of Charles Schwab hangs in the balance as investors anxiously wait to see how the company would weather this storm. Some people, though, are looking at this whole situation with rose-tinted glasses, and instead of running with fear, they're slowly edging closer to Charles Schwab, hoping to make some tasty profits off the back of this crisis. Okay, yes, we can assume that the bank has made some risky investments that have resulted in significant losses, but so far these are only paper losses, and there is a path out here. Unless things go seriously seriously wrong, there's a decent chance they end up going really rather quite well. Now, to be perfectly clear, this is not an investment for me. I will not be buying their stock anytime soon because I actually think their risk of collapse is greater than the market is pricing in, but in the interest of fairness, let's have a look at why some are bullish. Firstly, the assets in question are poised to recover their value. If they can be held to maturity, they will recover all of their value, and if bond prices start rising and stop dropping, they can draw back some of these values even before the date to maturity. Secondly, higher interest rates are proving very profitable for Schwab, as with most other banks, and so if they're able to focus on their winners and pull back from their losers, they could turn the earnings slump into a boom. And finally, Schwab's businesses are more resilient than some competitors. With every investment comes risk, even the so-called risk-free return of US Treasuries, and for me, this firm is not a buy as much as I wish it was, but there are those out there throwing millions into Charles Schwab's firm in the belief that they will weather this storm. Now, let's say you add all this uncertainty with a dash of biased media news, eventually you'll have a receipt for disaster. And just like how banks relying on one sources of income or deposits is a bad idea, it's also a bad idea for individuals to rely on just one source of news. That's why I created my 100% free newsletter Stoic Markets, so I can give back to you all and get the news directly to you. And that's also why I've partnered up with Ground News, who help to expose bias in news and make sure you're not falling for fake news. Ground News really is a great site and a great company with a great mission, and so is Stoic Markets, even if I do say so myself. So if you want better, more factual and unbiased news, check out the links down below in the description for Ground News, you won't regret it. Or if you just want to see why Blackstone may be on the brink of collapse, watch this video here.